If you're going to understand cash, you're going to understand how your business runs. You have to understand, what your revenue drivers are and what your income statement is. And so the next section really is, we call it profitability. And there's only 3 subsections to that. It's benchmarking, it's valuation, and financial KPIs.
Yeah. Each of those categories, the better you get or the higher you go in the scoring, whether it's benchmarking, valuation, or KPIs, it's how are you using them to set goals and targets. On one hand, if you think benchmarking, like, I don't even know what the benchmarks are at the lowest category, and then you might be able to say what they are, but are you actually saying, do you know you lag, that the industry might be a 50% gross margin and you're sitting at 35? Am I setting goals to work my way to where I understand what the reason is why it's lower and what I can do to make it higher, and then starting to work my way that direction? That's when you're getting to those higher levels that are in there. And we see that with a lot of where they might have a valuation for their company, but you're saying, okay, but if it's lower than you want, you got a multiple that's really low compared to the industry. What are we doing so that that's a higher number, so that if you decide to take an exit, that you get the most that you can?